soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
The Credifi testnet is live, so head on over to demo.credifi.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and Xcredi utilities, and Module X.
Ladies and gentlemen, this is Adrian Zluchik, CMT Charter Market Technician, CryptoBurb, and I'm here back in this stream broadcasting studio, if you will, the virtual studio right here. It's been quite a while. There's been a couple of back and forths, a lot of traveling lately, a couple of interesting conferences, including the one that flooded the entire Dubai, quite literally, metaphorically, for Token 2049. And here I am, I'm back. So it's good to be back. It's good to have you on the shows. And well, without further ado, let's take a look at what's happening, basically, on the on the news side, right? Because there's been quite a lot of interesting things, including this very one, where Donald Trump basically said that if you like crypto, you better vote for Trump. And this is on Yahoo Finance, and that's actually pretty interesting, right? I mean, I'm not the biggest kind of like a, what do you call it, like a stakeholder, right? I'm not the in the deepest interest for what's happening in the U.S. Stock in the U.S. kind of like elections. Like let's put it simply, right? I wanted to kind of like avoid unnecessary words, because what happens from my viewpoint, what happens is I don't have control over that. I don't have any way to impact that, right? So I'm not referring to this very particular news or Trump in any shape or fashion from the political target. I'm just saying that he said he's very wise, obviously. He's an OG, he's a veteran. He knows how to say and what to say, basically, to the people who ask different questions. And there was a guy asking about whether or not he supported crypto, and that's what Donald Trump said, right? So eventually he said that, again, if you like crypto, you better vote for Trump. He said that Biden didn't even know what crypto was, which may or may not be true. Regardless, this is his way of acquiring the political votes for his upcoming election run later this year in November. So that's quite interesting, right? And it seems that it overall captured a lot of attention from the media. And while I'm not necessarily particularly dedicated and interested as much on what's happening on the U.S. presidency election side, politics, like I said, I cannot impact it. I have no way. I don't vote there. I'm not a U.S. citizen, so I can only comment from the backseat driver position. Hence, my opinion is quite irrelevant. Though, I see it from a different perspective, and this different perspective is basically the stock market presidential cycle, right? Because the stock market is dependent upon what's happening on the U.S. presidential elections, and depending on who wins, it typically turns out to have a different effect on the stock market performance, right? And here's a shout out to Jeff Hirsch, who's a godfather of seasonal studies, and basically his seasonal analysis of the stock market presidential cycle shows and proves that regardless of what our beliefs are, that the Democrat presidents with big dose of certainty, lets the markets perform better, right? They typically come up, as more as easier on the more monetary policy side. It's kind of like coming in with more money printing, with more inflationary stance that empowers the markets, right? Because there's more liquidity, there's more money in the market. So historically, the Democrat presidents typically kind of like outperform the Republican presidents. In that case, Joe Biden would outperform Donald Trump, coming from those two different bastions, right? Regardless of what my beliefs or what my thoughts are. So now those are the facts. So on another fact side, I have a couple of charts to run through, and obviously Bitcoin and crypto now are not trading in vacuum. Hence, we need to understand that they are connected, they are intercorrelated, they're correlated more or less strongly with traditional markets as well, with stocks, right? So why don't we take a look at the Spinto market technical analysis approach promoted by John Murphy the other day, and combination of relative strength and seeing what the markets are doing on the traditional side before we jump in the crypto per se. So let's take a quick run over that. Okay, so well, after the FOMC's decision to pause the rate hikes again, there's been a lot of uncertainty. I promoted the latest NRF, National Retail Federation report for the monthly economic report. I'm going to show it to you guys in a second with the main conclusions. However, what matters again is that how it all performs, right? How it all performs here on the there you go, on the market summary side is overall that we're back above the averages, right? We're well back above the averages on the industrial Dow Jones Industrials with 0.25% up today. The 50-day trend is kind of like sluggish. It's a little bit, sideways oriented. The 20 MA, the short-term trend is kind of like, just oscillating up and down. It seems it's gaining back a little bit of an uptraction right now after this double bottom pattern reversal, of this corrective tide that it took us from the 40,000 all the way to 37,500s. It seems we're on the way up, kind of like filling this local gap that we made. Because if you see, right after the reversal day, there was quite a gap. Those gaps, or as Japanese technicians like to call them, the windows, like they tend to get closed. They tend to be this vacuum, kind of like pulling in the air, pulling in the matter of the prices, and often acting as the resistance due to the order clustering and some sort of like magical thinking at times. So even though there might be a little bit of a positive push, from the 20-day over 50-day moving average crossover, I would be cautious, right? Because we might be at the potential resistance zone right over here, right? So take it as we go. Otherwise, the bull market on both Dow Jones and S&P is very well marked by the rising 200-day moving average. And there is no way to debate this. There is no way to deny. There is no way to undermine this, because this average representing the bull or bear trend is moving up. As simple as that. So the S&P again is in the previous resistance area, kind of like a region. So because of order clustering, we can expect that traders are going to cluster their sell orders in that region, which may encourage profit taking and slow down the prices at first while trying to overcome to the new all-time highs, right? Which would push us this time probably above 5,300s. So all things considered, then if we go and check the XLY, which is quite an interesting, quite an important take, is that the energy market, has been quite strong. The energy market has been quite strong lately with a local, some sort of like an ABC correction, with the 200-day trend rising but slowing, 50-day trend rising strongly, and 20-day short-term trend kind of like moving sideways. So this seems to be some sort of like a massive push almost towards the new all-time highs, right? While kind of like inflected or influenced by a lot of sideways action. So the medium-term push is a little bit more significant than the 200-day push here, which tells me that this might be a medium-term wave, right? I would be cautious with taking overextended, long-lasting kind of like conclusions out of that. Still, the energy has been outperforming by a lot lately. It's been significant player right there, and the energy prices are inflationary, right? The higher the energy market goes, the more inflation we get, which kind of like aligns in parallel with the latest inflation jumps, right? And potentially might be a reason why the Fed hasn't decided to cut the rates just yet. Okay. On the other side, USB, the 30-year bond prices are still trending down, right? There's no positive trend. There's no constructivity right there. There's no constructive tendency of the 30-year bond prices, though long-term maturity prices, driven by the investors' expectations to prove anticipation for the upside breakouts, right? There's a little bit of a curve up on the 20-day trend, like I said, some local basing pattern. However, I wouldn't overcomplicate things. The trends are down. That's what matters, right? So no signs of upward reversal just yet, at least in a confirmed fashion. While this upward positive tendency since 2023 ended and 2024 started seems to be marked well for the TNX 10-year bond, 10-year treasury yields, right? Which, like I said, with the effective Fed fund rate staying at the pause at 0.50525, it seems that there might be a little bit of an anticipation from the community side, from the traders side, that the potential rate hikes are going to get stopped again, or that it might be even the rate cuts, right? So 45, it's a little bit of like an equivalent of 4.5%. Interest rates, if you will, for the expectations driven by the 10-year treasury yields. It seems, before we run into crypto, the US dollar index, the USD, is basically on a 200-day basis moving up, but it's sluggish. 50-day trend is giving us quite a nice blue trend line, giving us often acting as a support and paving us the way on which way the markets go. A little bit of some sideways kind of like turbulence right there, breaking back and above, and below 20-day trend that is turning sideways. So sideways local weakness in the overall strong 50-day momentum presented by the 50 days simple moving average, while sluggish growth of the USD, right? So there seems to be a lot of overall sideways action oriented this year for the dollar. And well, I would argue that if we go to one of my latest threads, what we may actually see, there we go, that's the thread, right? Let me just give you a quick review of what that's going to look like. So the National Retail Federation reports, they're available at their website, by the way. I highly encourage you guys to go and check it out. Each month they evaluate the US economy, consumer sentiment, and all the important critical economic factors. So the overall GDP slips to 1.6% from 3.4. That's quite a significant aggressive dip, right? With robust economic indicators elsewhere. Private sales to domestic buys, are 3.1%, signal continued spending. Inflation at 3.4% year over year for the latest month. Employment steady with wages up 4.3%, supporting consumer spending and with inflation, right? That's the my outlook. That's where we are right now. And going a little bit deeper into that part, the sales and sentiment, the retail sales are growing. However, the growth is slowing, right? The retail sales I hear, are here marked over here. So versus the last month, it's a little bit higher. However, the overall tendency seems to be down on those blue bars representing the seasonally adjusted retail sales, while the consumer sentiment improves, right? From 50 last year, or actually 2022, when the inflation was the biggest, almost 10%, right over here, right to 75 to 77 as of lately. The job growth, if we are to just maybe give a little bit of a different arrow color, the job growth says that there's a steady job additions. There is a lot of resilience on the job market, which is also why the Fed hasn't decided to drop the rates just yet, because the wages are up but slowing. The job market is still strong and resilient. That suggests that, well, the inflationary effect of the wages and of the strong job market is basically still present, which is why they are not rampant to cutting the interest rates, just because it's going to get out of control and cause a lot of headache right there. So the 3-month average is moving sideways, just like you can tell. And this 3-month sideways trend represents well what's happening, and back and forth, almost random movements on the non-farm payrolls, right there on the unemployment. GDP unemployment, GDP growth again cooled to 1.6% with the forecast of even slower growth. Kind of reminder, Q2, Q1 2022 were actually negative, right? Minus 1.5 and minus 0.7, if I'm not mistaken, it was. And we got back above towards the end of 2022, well back above Q3 2023, and we're still slowing again, right? While the unemployment rate is moving towards 4% mark right there. Retail sales versus against the retail sales to domestic purchases. Basically, consumer spending drives healthy sales growth. So the consumer spending is still decent. And when you compare that to the final sales to the consumer spending versus GDP, there is quite a lot of disparity. Okay, so there's a lot of impact from the spending side. However, the growth on the GDP side is still not significant. Income and expenditures both keep growing, right? With the PCE, personal consumer consumption expenditures, which is also a lot of definition of what the inflation is. It shows that the disposable income still grows, right? So there is a lot of disposable income that can be spent also on the financial markets eventually. However, with the personal consumption expenditures, coming for the typical inflationary spending, this also grows, right? So there is not much improvement on that side in terms of the economic conditions. The employment costs, like I said, the wages are up 3%, locally declining from 5.5 lately, so which is a good thing over the last 2 years. So the job market is cooling. However, it's still elevated, right? At least versus where it was, a couple of years ago before COVID at 3.3%. Then the PCE price index, personal consumption expenditures price index, is at 2.7%, reflecting continued price pressures, especially in services, right, which is the red at 4%. So the 4% inflation comes from the services right there, which is quite an important mark. Volatile but strong spending patterns indicate ongoing consumer resilience. So the consumers are resilient, right? Spending on goods at 3.6%, spending on services 6.9%. So there is a lot of, again, non-trending kind of like environment, a lot of sideways ever since January 2023, since the beginning of the last year. That tells me that, again, there's a lot of resilience. It's not moving in any direction, even though the rate hikes were presented. So the overall, despite the GDP slowdown, strong consumer and business spending, coupled with stable employment conditions, suggest the economy remains resilient overall. The Fed's cautiousness on the interest rates reflects ongoing inflation concerns and economic uncertainty due to the PCE, services, and the energy burst right there. Why is it important to know that? Well, because eventually the economic cycle is like a complementary side to what's happening on the financial cycle. The financial cycle leads the economy by 6 to 9 months on average, and it's worth reading both, it seems, more often than not. Okay, so having the traditional side covered, let's take a deep dive into what's happening on the crypto side. Okay, so the crypto, it's also kind of like interestingly moving in some sort of like a channeling pattern ever since the new high 75, so almost 75K, 74K, marked early March. And ever since, we've been following this quite a typical pattern of a slowdown, towards slowdown of an upward trend. However, the slowdown is only temporary, which can be understood and seen and reflected by the aggressively rising 200-day moving average, corresponding and accounting for this massive growth of more than 70%, I think, over the last couple of months, and even 200% approximately since the $25,000 lows of September, which is when Jeff and I released our seasonal article last year. Okay, so regardless of what we named this pattern, there was a couple of ideas, on how we can name this. First of all, it was some sort of like a range. Then it evolved into, or first it was an actual pennant pattern, right? Then we had to redraw this a couple of times. There is nothing wrong eventually with with redrawing the trend lines, because unless we try to prove and predict that we can predict the future, right? Those patterns tend to evolve at times very randomly, so it's very difficult to predict that. However, they correspond with what they present. And what it presents is a local sideways oriented or a little bit local downward oriented price action, right? Of lower highs and lower lows, right? put against and post against the massive upward trending tendency on the 200-day trend. So there's aggressive bull market with the main support, the moving averages off on the market support as those magical magnets, that attract a lot of attention and give the feeling of a fair price, right? Because if there is a mean reversion and Bitcoin pulls back to this fair price level, eventually it may be understood as, well, a complete reset, mean reversion, right? As a statistical advantage that Bitcoin has pulled back and come back to normal, right? And hence can be picked up. So you can expect a lot of orders stacking up basically around $51,000. And it climbs, right? Along with it, climbs the support. So I made a couple of long-term purchases some time ago at 57,678 and earlier at 60,000 0.86. 60,086, right? So those are my long-term purchases with a 200-day BPRO trendline touch support, right? If you will, eventually on the rising tendency, like I said, strong aggressive bull market, it may be slowing down just a little bit lately, right? However, overall, we're talking about this rising tendency, and this rising tendency tells me that, well, if we move in a corrective tide opposing to the general dominant tendency moving upwards, prevailing over the time, this arguably tells me again that the conditions might be for the buy the dip opportunity. It seems, right? It seems this way. So before we move on, please let me know, guys. Good to see you, Patrick, Rafael, Gregory, Erika, as always. If you have any quick questions, please drop them in the chat. I'll do my best to answer them ASAP for you, right? Because we have a couple of charts to discuss. And eventually Bitcoin, like I said, with a local rejection of the 12-hour chart, on the 12-hour chart right there, from the BPRO indicator that drives my shorter position trades, short-term trades on the buy and hold. It's gaining another rejection. So it's a lot of back and forth, right? The bear signal, then chopping around the bull signal, and the bear signal, then the bull signal, then the bear signal if it proves closing below the $61,000 mark, right? So the sideways is basically, kind of like a middle stop, pit stop, before the major trend continuation that is moving to the upside, right? Because again, the dominant tendency of the rising market, of the bull market, tends to persist. Those trends tend to persist. We seem to be still in the early stages of the bull market, right? A lot of people are still finding the sentiment is still crazy low overall. While, like I said, those tendencies are that the trends tend to persist in the predominant direction here to the upside. So even though there's this local sideways, local kind of like a downward tendency, slight downward tendency, more sideways into it than the beautiful downtrend, right? It's a little bit somewhere in between. And there is a lot of chop. However, this chop, like I said, I choose to get this chop. I lose a lot of times, however, I lose small money, right? So on this chop, I lose, lately per trade about, I think it was 0.5% of account, 0.6, 0.2, 0.8. So a couple of chops while waiting for those big runs, right? For the big runs right there from 4,800, I think it was. What was the actual price? 4,500, sorry, or 4,800, something like that. It took taking us from there to actually 66, when another stopping price was hit. So there's Bitcoin is on the verge, is on the line of kind of like turning back bearish. However, like I said, it's been almost random lately with a slight declining tendency. So I wouldn't necessarily take it as anything overly important in the long term, right? It's not calling the bear market. It's not bringing the bear market. It's just some local turbulence, like I say, some local turbulence, a little bit up, a little bit down. Overall, ahead of the major trend continuation, that's what it typically looks like. Otherwise, anything that is basically moving between the short-term momentum bets, the BPRO momentum bets, defined basically by the standard deviations metrics against the BPRO trend line, the sensitive trend line. That is here not in the chart. It's hidden. Anything between basically 60, between the bands, right there, is the typical window for Bitcoin to move, and there's nothing wrong with it. This is a typical volatility. This is a regular type of movements, right? Those can be expected anywhere between 60,000 approximately and 65,000, 64,500. This is a typical window for Bitcoin to move. And as long as it moves in that particular direction, those movements are normal. There is nothing wrong with it. There is nothing original. There's nothing crazy. There's nothing constructive either, right? Most of the time they happen to be some sort of like random fluctuations without much weight put to it, right? That what matters for the trend perspective are just breakouts. If you see a breakout, massive breakout in the upward direction above the $65,000 mark, 64,500, or below the 60,000, or even lower, a little bit lower here for 59,000, for the lower end of the low band support, then this is what matters, right? You're searching for those big breakouts. This is a big warning if that happens, right? For the market to go perhaps even lower towards this $51,000 mark presented by the 200-day moving average, all right? Otherwise, it's shopping around. It's as simple as that. Okie dokie. So I also had a couple of points, right there before we move on. I also had a couple of points to take by today's analysis. Right? So there's a couple of chart reviews that I did eventually. One of them was the GHX, the Gamer Hash coin, right? The Gamer Hash AI right there. I'm not affiliated with this project. My friends run it, however, I'm not affiliated. What I mentioned is that what I see, right, based on the actual chart analysis, it seems that bull run persists. The 200-day uptrends, both uptrends, on the 200-day moving average and the 200-day trend, which is not present in this chart. This is a 3-day 200 period trend. Both are moving up, however, they are slightly slowing, okay? So at the actual 157, being up 20, almost 30% today, and year to date almost 1,200%. The daily B-Pro bear tendency, the corrective tide persists, right? This is what we are looking at, basically, right there, right? So the daily bearish tendency seems to be moving on with the main key support at 0.18. 0.18 seems to be the main resistance, or anywhere between 0.18 and 0.16, right? If I were to make to take this kind of like a reddish color, perhaps it's going to be easy for you to notice, is that the main support pocket is anywhere between 0.06 and 0.073, right? Presented by those moving averages. And at the same time, there's been some decent push, like I said, almost 30% off the lows, right, reverting back to the mean towards 0.16, 0.18 resistance, right? So the RSI is breaking above the 50-day momentum, which is falling. That might be a positive sign. However, overall, the bull signal, like I said, is not confirmed yet. So we're searching for this massive breakout above 0.16, 0.18 to trigger the bullish signal. The next project that I reviewed was CytaChain. And with CytaChain, again, full disclosure, we are partners, right? The Bourbon is my company, and CytaChain, we are partners together. So take it as you will. Falling 20-day moving average, which is basically the red curve right there. Falling 20-day moving average is doing what it says it's doing, right? It's falling, right? And because it's falling, there's been some tendency for the overall market to take hits lower. And the falling 20-day mean reversion that was actually present, to catch up with the average trend has been completed, right, with the touch of 0.0014. Ever since the low of 2024, we are actually up 38%, and at the same time, we are down 38% right now from the highs, right? So 38% up and 38% down, which tells me that, well, there's some sort of like an equilibrium point, right? We're in the middle of the range, basically. And this aligns with the overall dominant tendency for the market to go sideways, to go horizontally, right? So, and again, their team, is doing incredible work, on updating the community. And one of the latest updates is the Cyta Pro app, bulk crypto payments, right? It's quite an interesting feature. Actually, when we go there, it's something for you to consider. You can make the bulk crypto payments, right? That's something interesting. When you're doing a lot of payments, bulk crypto payments may be something interesting. So again, quick shout out to them. However, like I said, from the technical perspective, it seems we are in the overall sideways tendency with a local short-term decline presented by the 20-day moving average falling, while at the same time an overall neutral tendency, neutral equilibrium tendency for this STC token is actually present. Okay. The third project that I took a review of is an excellent project. Also, we're not partners, so I can take it as you will as well. The long-term flat tendency, again, another coin with flat tendency next to the Saita chain coin. We're taking a look at it as A0, LF0. It's taking the sideways hits. It's moving sideways, right? There's a lot of chop. There's a lot of almost, I would say, random walk, right? Not necessarily in this case, but if you move sideways overall, you can expect that there's so much more randomness because those trends are not moving. Those trends are not existent, right? If the trend consistently moves in one direction, well, this is what defines a trend, right? Be it to the downside or to the upside. So a chop around basically brings those swings, from side to side, kind of like a swing, right? So it's like a ping pong, like ping pong, and so on. So you can expect there is almost 50% frequency for that coin to be there and 50% frequency of the time, basically frequency or time for the A0 to be near the lows. And there is nothing wrong with it because this is exactly what the sideways tendency means. So the long-term trend is flat. There is no bull market, represented by the 200-day moving average, while at 1.2 and 0.07 on 0.7, basically you can mark those critical levels. So the 200-day moving average right there is barely visible, is 1.2, while at the same time 0.7 through 198, those are the floor and ceiling levels for this range that perhaps just maybe an accumulation. Back in the day, I remember there were a lot of coins that I dropped, that were moving sideways, just because they were moving sideways while I sold it. Back in my early days, it kind of like moved rampant over 30x or something. So then this big sideways, in hindsight was looking like it was nothing, right? That was this big sideways that it looked big at the time until the big bumps came in. So I don't know if that's going to be the case here. However, it's something to consider eventually. Daily BPRO burst setup continues, right? Like I said, with the main resistance at 0.91. A 200-day BPRO trend is falling with a resistance at 1.07. Well, year to date, minus 45%. So not necessarily the best performance this year. Quite sluggish. So little interest, no bull market signal yet. However, they have quite strong fundamentals. So just maybe the sleeping giant, you never know. Only in the hindsight. And the very last two coins were basically the chart review again of our partners. Those are the five most frequently mentioned coins, okay, on the radar under the post that I do, right? So it's not something I just came up with. Those are the chart requests from the community. Every Thursday you can vote on the chart requests. So soil farm right there, and at basically at the current prices, it was almost 3% down today with the market cap of 13.5 million, making it top 1,000 almost. 24-hour volume quite low at 1.4K, when the volume down 10%. Year-to-date performance is quite nice, right? Post against the let's say the A0, negative, quite a negative side of more than 30%, 40% in minus. It's good to see this positive growth on 1.10, almost 110%, while still the BPRO daily bear setup continues. A lot of coins are in the BPRO daily bear setups, right? Because of what Bitcoin is doing as well. There's a lot of correlation. So short-term correction with an overall medium-term trend, and this medium-term trend is represented by this grayish ascending line, right? While the 200-day trend is actually visible here. You can see it here. And this 200-day trend is telling you it's moving up. This is what cannot be denied. So it seems to be a bull market overall. Okay, so short-term correction within a bull market typically leads to bull buy the dip opportunities, with a main resistance at 2.5 presented by the BPRO right there. So below medium-term support of the 50-day trend. So local slowdown, local correction in the overall bull market. That's That's the judgment, it seems. And the final pick is Velo. Again, that was the community request. And the Velo, I don't know this project, Velo Protocol, it seems. However, the bull market is confirmed right there, and it's actually looking nice, right? The bull market breakout is present because of this constructive price action. There was some sort of like a sideways accumulation pattern that stretched for almost over a year, like year and a half or so, and it's just seen this massive push higher, right? The market price then to move higher with this long-term averages moving up. The 200-day moving average, this gray line again, is moving to the upside. There is no way to deny this. There is no way to undermine or ignore this. So the 200-day trend representing the bull market is rising, confirming it's a bull market aligned with the price action that is constructive and is breaking into the new highs. While a little bit of the caution comes that the RSI is moving sideways, right? There's some local sideways channel for the other side between 40 and 70. So ideally, the momentum also ramps higher towards the upper 80 or 90 even points with the movement. So this may be an early stage of a larger movement with the next resistance at 0.14, it seems. And 0.04. Yeah, so this is it, ladies and gentlemen. Those are the coins, those are the picks. And like I said, every Thursday, you guys can comment on those points. You can comment on which coins you want to see. Every Thursday, I review the top 5 mentioned altcoins. And the remaining, speaking, my man, good to see you. And the remaining point is, that it's always good to keep keep the economic side, kind of like the economic insights. I highly recommend you guys check out the National Retail Federation and the monthly economic reviews. I'm gonna keep bringing them in a very substance manner, very short copy, very short text oriented, facts only and evidence, facts, numbers, facts, evidence is what matters. So the economy is strong, resilient, which is a lot of kind of like job market and the PCE being high on the services side is not really letting Fed just decisively drop the rates just yet, which may turn into a couple of months of sideways overall, aligning with the seasonal tendency if we speak about the predictions of the Q3 being sluggish, being slow. So take it also into consideration while we're planning your trends. Just maybe there's not too much sense of forcing a lot of trades into the Q3, which is typically slower and lower in volume. Something to consider, ladies and gentlemen. And as always, like I said, every Thursday, I'm going to review the top 5 mentioned coins. And it's been great here to be a host for today. It's been Adrian Stinchik, CMT Charter Market Technician, CryptoBurb. And I'll see you on the next time. God bless.